Hi everyone, lovely to meet you all, and also to everyone watching this on recording. I'm Sabrina, I'm COO at Pento. We're a payroll company based in the UK. And this is just basically like a payroll essentials for ops leaders and, people who do payroll whose job is not payroll, in a nutshell, which often tends to be us. We are Pento is very focused on the UK, but a lot of this will be applicable to payroll processes wherever you're running them. We will have a couple of slides that are a bit more UK specific, but a lot of this is kind of just about the process and the workflows of kind of managing payroll wherever you are. So the plan for today, we're going to try and keep quite a fair bit of time at the end to do, questions and to kind of, to try and help you guys work through any particular challenges that you're going through. And we're hoping that you'll come away from today feeling a bit more at ease with running payroll and finding some ways to make it easier for yourselves, whilst also kind of making more time for the important stuff. Payroll is something that has to happen, that people are profoundly not chill about it not happening or it going wrong. But beyond that, beyond getting it done and getting it done right, there often isn't like a ton of competitive advantage to a payroll process. So a lot of what we're going to talk about is how to kind of make it easier for yourself, stress-free, fast, so that you can get on with all of the millions of other things on your plate, which I'm sure for many people here, that's quite a long list. But just a quick reminder, zooming out a little bit, it's always important to remember why payroll is so complex and so particular. And in a nutshell, a lot of payroll is tax. And this means that you're very much at the whims of whatever a given government is going to do. So today was just announced that in January, the employee NI rate is going down from 12% to 10%. And that is like your classic payroll thing where something like that will come out very quickly at the whim of a government. It does mean that it's not as nice and horizontal across lots of different countries, and you always just need to be aware that tax is a very complicated and interconnected system, and anyone with a particularly weird setup, especially people who are like dual nationals, or for whatever reason tax resident in two countries, are always going to end up with more complex setups. But like as a general rule of something that's like helpful to bear in mind, and and I have put there, annoyingly there are exceptions, and there are exceptions, but you can generally say that most things that are an element of pay, such as a commission, a bonus, a salary, a benefit like private healthcare, where you're giving value to an employee that they wouldn't otherwise have had, these things are usually taxable. But if it's a reimbursement of an expense the employee has paid out of pocket, it's usually non-taxable. Now, annoyingly, there are exceptions to this, but this is kind of like just an important general thing to be aware of, because obviously one of the most important parts of payroll is making sure that as a company, and as your employees, that you're meeting your various tax obligations. 95% of the time these rules will hold. If you are paying someone, if it's a benefit or pay, properly taxable. If someone had to pay for something out of pocket that should have been the company's expense, that's usually non-taxable, with exceptions. But starting off like from the beginning, like, as I said, a lot of it is all about, trying to get payroll right and on time, preferably first time, avoiding duplications, and trying to get a given process as streamlined as possible. And a lot of that comes down to good planning for payroll. And it's one of those things that, the more you set things up to be ready to run payroll, the smoother the more complicated parts of checking payments and calculations and things often goes. And so like these are what I would say are like the key elements that you need to plan for. employee identification, and I just call this out to say you want some consistent way to be able to identify employees for the purpose of payroll. I would recommend having like some kind of employee ID that is set by HR, that is unique to a given employee, that is separate to a person's NI number, because a person's NI number can change. If, for example, they have just come into this country, they will be given a temporary NI number in the first instance. So you can't always rely on NI number as an identifier. You can't always rely on names. You know, you may have 4 John Smiths at your companies. So having like an employee identifier in your, possibly set in your HRIS or held in a spreadsheet somewhere. This is something that is, it's a tiny thing, but it makes things much simpler down the line. But, you know, having a way that across all your systems, you can identify a given particular employee. And then when it comes to payroll, there are lots of different elements. You know, there's the data collation, the preparing all of the things that need to go into payroll. There is a data transfer, whether that is to a system, a software like Pento, or to an outsourcer like ADP. You know, you're going to have to transfer that data into the calculation engine, whether that's an outsourcer or software. There is obviously, of course, the actual calculation part. There is a series of approvals. Now, some of that will approvals tend to come in at the data collation phase. Some tend to come in after the calculation phase, and we'll talk about approvals a bit more later. Planning for payment timings, because depending where you are and what kinds of payments you're doing, it's not always the case that you press a button and it ends up in the employee bank account straight away. Making sure you do all your statutory filing, so particularly pensions or 401k. I put HMRC here, but you know, equally the IRS in the US, or like the relevant tax agency in whatever country. And then the accounting side of things. So the finance people in the room will be aware of the concept of journals. When someone pays a payroll, that might go out of a bank account as a lump sum of £1 million, but the finance team might want to put half of that into sales and marketing, half of it into R&D, etc., etc. But these are kind of like the core elements of an end-to-end payroll process, and we're going to try and go through a little bit on all of these. And we're also going to send these slides around afterwards, and you'll see some things have underlines, and where there are other underlines, those are links that you'll be able to click into at your leisure. So data collation and transfer, you don't necessarily need a fancy system to do this. At Pento, we see companies do this in lots of different ways. So this is, you know, how do you collect all of the joiners, leavers, salary changes, expenses, maternity, paternity leave, pension changes. And we've seen companies handle this in a few ways. Larger companies that can afford a very expensive and complex HRIS setup will sometimes just do this in the HRIS, or in their expenses software, or in their time and attendance software. But we often also see a lot of companies set up a payroll@company.com shared email inbox, or even route that through to a ticketing system like Zendesk and run it almost like a customer support function where multiple people can access that email inbox. We've seen people input it into a Google form, and we've seen people input it straight into a shared spreadsheet. And actually, we have an example of a spreadsheet that people can use if it's helpful. Just ping us afterwards and we can send you a template. But I think one of the key things to do is to avoid confusion and decide how are you going to collect payroll changes in order to avoid duplications. And I would generally pick, you know, trying to do one of these things and making sure that people in the company who are, shall we say, the architects of those changes understand where payroll information needs to be sent. So if, for example, you have a sales team, they do commissions, and maybe you have a sales operations person who calculates the commissions once a month, they need to know once a month rather than you needing to chase them. Although you can set up some homegrown automation and chasers with tools like Zapier, or just, you know, recurring emails ready to send out. You know, once a month, do they need to email those to payroll@company@? Do they need to submit it into a Google form? Do they need to upload it into the HRIS? But making sure that it's clear to everyone that when there is a change that needs to go into payroll, how are you going to capture that payroll information? And yeah, usually that ends up going into either a ticketing system or a spreadsheet ultimately. And that then effectively forms a list that you can either send to an outsourcer or work through one by one to transfer into your calculation system. And being able to collate that information in one place and have like a single source of truth list for a given payroll, it means that you can effectively transfer that information to whatever system is doing the calculations. And it also gives you a list to check the post calculations results off against. So align on and communicate cutoff dates as well. You know, it may be a case that you don't want to be making any changes to payroll more than 5 days before for payroll. Again, things like if someone's got to do the calculations for the commission, it's really important that they know what that date is. The HR team, for example, needs to understand if someone is joining on the 28th of a month, they're not going to get paid in that month, they're going to get paid the next month if you have a cut-off date of, say, the 25th. So it's important to align on cut-off dates and process and communicate this. And also just to determine who is responsible for data collation, who is going to go through the ticketing system, the payroll inbox, and pull that together, and who is responsible for the data transfer to the outsourcer or the software. But by being a little bit thoughtful of this ahead of time, it can save you having to go back and do things again later. And I'm assuming we have like a lot of HR and generalist people here, and in the early days, it often tends to be one of us. But we'll come on a little bit later as to how to think about when that transition happens, when you can start to hand that off to different people and segregate some of these duties. And creating on whatever checklist you have, it's worth keeping track of a few particular things. So a lot of these underlying things are very UK specific, but for joiners and leavers, you will either need to collect or send a P45. For upcoming parental leaves, you'll need to often collect forms that come from the relevant person's doctor. For sickness absences, you'll need to track sickness somewhere because statutory sick pay eligibility has various complex rules around it, and you may have some kind of enhanced company sick pay policy that is dependent on things like how many days sickness they've taken in a year. You need to be aware of like what your pension auto enrollment setup is. Some companies enroll people on day one. Some people have like a deferred enrollment whereby there's a window of like 3 months before someone's enrolled. And you also need to be aware of any checks that you need to do regarding national minimum wage. Now, this last one is particularly relevant to people who deal with 0 hours workers or variable pay industries. Usually if someone has a fixed salary, unlikely that that salary is below the national minimum wage or their pay is going to drop below the national minimum wage. But especially if you have 0 hour workers, this is something that's really important to get ahead of. And once employee values are calculated, there are often, well, and actually even before sometimes, there are often a number of approval steps. And the 3 that we commonly see is that there's often like a finance aggregate review, which is to say grouped by pay item, which, for example, what is the total amount of commission that we're paying out? And does that make sense? What's the total amount of expenses? What's the total amount of referral bonuses? There are sometimes large amount reviews. So, for example, any unusual pay change that's over £1,000 or £5,000 in a payroll needs a certain level of approval, and usually there's some kind of management review of the top level totals. I'd say in the first instance, keep it simple, but at least align internally on what checks and approvals are important for you. Because the last thing you want to do is to sign something off and send something and pay it. It's one of those things, if you underpay someone by a penny, they will tell you straight away. If you overpay someone by 20 grand, they probably won't. So you definitely want to make sure ahead of time that any payments that are going out actually should go out. And you need to bake this into your timeline. And what I would say is that in terms of signing off, can we pay a certain bonus, etc. All of those kind of pound dollar amounts should probably be approved pre-submission to the system. And that only that kind of like management top level review / sense check to make sure that things are flowed through are afterwards. So particularly this finance large amount review or the total amount of commissions going through, I would really suggest that those checks actually happen quite early in the process rather than waiting until it's all come back from the outsourcer or the system and it's gone through all the tax calculations and being done there. And then let's say, you get to the other side, you've got the list of who needs to be paid and how much they need to be paid and how much needs to go to HMRC, etc. There's also like a lot of different ways to make payments to employees. The two common ways in the UK are faster payments or BACS. The EU equivalent of BACS is something called SEPA. So faster payments are basically immediate. If you ever transferred someone something on like your personal Barclays account, it's probably a faster payment. It turns up where it's going straight away. In business accounts, and I apologize, I might sneeze in a second. In business accounts, these payments can sometimes incur charges, which is sometimes why people don't do them. And it's rarer for banks to support bulk file uploads for faster payments, but it's worth checking. Some companies get around this by using a neobank like TransferWise or TransferWise to do kind of faster payments, because you can sometimes bulk upload faster payments in a way that's easier than in say Barclays.net. But your bank may support bulk files, and I would say, sorry, I'm going to sneeze. Oh, pardon me. I would say beyond about 10 to 15 individual payments, doing payments one by one, whatever system you're doing in it, gets disproportionately painful. I've been there, I've done that. If you're getting to the point of where you are either more than 10 employees or going to become more than 10 employees, definitely explore with your banking provider. Is there a way to do bulk payments? But it's really important to also check with them what the payment limits are. And I've been in this situation in my last company in the very early days where we suddenly found out that we had a payment limit of only £250,000 a day that we could pay anyone. And then we had to do payroll across 2 different days because we would hit the limit if we tried to pay everyone in one go. So it's really important to be very, very aware of any limits your bank may have. These may be limits on the total number of payments you can do in one go. It may be a limit for the total amount of daily payments. It may be a rolling limit over a period of say 10 days, but it's really important to know this ahead of time rather than needing to turn up on the day and say, hey, sorry, you're getting paid late. No one ever loves that. The other way that payments usually happen in the UK is something called BACS. And this is usually much cheaper, but it's worth noting BACS is a 3-day process. And that is not, that is just how the BACS system works, in that there is a day that you submit, a day that it processes, and a day that it gets paid. And that's just the way that it is set up. The one advantage of a BACS system is that you can sometimes partner with what's called a BACS bureau, and a lot of accountancies or software will offer this. And if you get a service user number from your bank, which is called a SUN, you can then have that accountancy bureau software pull money out of your bank account and send it straight to the employees in bulk. But this is a 3-day process, so you need to bake into the fact that you're then making your payroll cutoff date at least 3 days earlier. And then, of course, some softwares like Pento will allow you to do faster payments in bulk as well. So it's important, though, to understand the limits around your payment structure, particularly around what timeline limits there are, and if there are any finance approval steps. So a lot of companies won't allow any payment to be made without 2 ticks, so 2 people approving a payment. And in small companies, if you have this, it's really important to know what you're going to do when someone is off sick or away, because sometimes it's a 2-tick system and there are only 2 people with access to the system. So the moment someone's on holiday or away, this can fall apart. So it's really important to be aware of kind of any leaves or approvals that need to go into that. And then, of course, you need to also distribute pay slips. Now, most systems will do that for you automatically one way or another, but it's worth bearing in mind that just like the payment hitting the bank, if the pay slip doesn't end up with the employee, you're going to get questions, and half the battle is getting rid of the questions before they get to you, because like those questions are often like a real-time sync to go and then chase it up and find out what happened to this pay slip and send it back. And then, after the actual payment has gone out to employees, yay, and and then also, the payments to the tax authority, say the HMRC. It's worth noting in the UK, you usually have, I think it's somewhere between 2 weeks and 20 days to pay HMRC after you have paid your employees. So like, let's say you pay your employees on the last working day of the month, it might be, the 16th, 17th, 18th when you pay HMRC, which particularly for businesses with, tricky cash flow requirements, that a couple of extra days or a couple of extra weeks can be great to have that breather. Just make sure you don't forget to pay HMRC, because again, the tax authorities are not chill about not getting their money. But then there are a number of other pieces of reporting in addition to just sending HMRC or the tax authority the money. So in the UK, there are things called FPS and EPS, and I won't bore you with what they are, but basically it's reporting to the authorities what you have paid to whom. And a lot of the motivation behind that is because some people will have other sources of income. Doesn't necessarily mean they have a second job. It might mean that they rent out a second property and that counts as income as well. And, the tax authorities want to collect all sources of income to make sure that a given person is paying the correct tax. And either outsourcers of software will usually file these for you, but it's worth making sure if you are spinning up like a homegrown system that you have this set up and that these filings happen. You also usually need to submit a report of contributions to your pension provider. So if you're an employer in the UK, chances are you're going to have a pension provider because you're going to need to auto-enroll your employees. Usually they require that you tell them once a month how much each employee is contributing. And then finally, the accounting exports to journals. And this is something that really grows in complexity often as a company evolves. What I've usually seen is that in tiny companies, payroll just kind of gets lumped into like one big payment, salary costs, and then over time, as the finance team becomes more complex, they need to understand, how much of this cost is R&D, how much of this cost is sales and marketing, how much of this cost is general and administrative, and then they're going to end up going down into needing to know for specific people on specific teams, their pay needs to go to like a different coding in like the accounting system, and so what's really good is I would always ask, especially if you're an outsourcer, to get spreadsheet breakdowns of all of the pay elements and pay items in a spreadsheet, not a PDF. Nightmare if you give a PDF to the finance team, not much that they can do with that. In a spreadsheet that has that unique employee ID that we spoke about earlier, so that the finance team can then do VLOOKUPs to figure out, okay, this particular element of pay should go to this code and so on and so forth. Because especially as the company's financial reporting evolves and there's like a company's complexity evolves, especially if you end up having an FP&A team, this is something that becomes important, and having good data there is very valuable. And often your people teams will need to work with a finance team to keep accurate tracking of a person's department, project code, whatever it happens to be in the HRIS. And then beyond kind of just getting it right and on time, you obviously need to work with local regulations. It is worth, if you have a direct entity and are paying direct payroll in any jurisdictions, having a partner that you can lean on for expert advice. It might be an accountancy firm, it might be a software provider, but a lot of the triggers of things that might make you think, should I go and get advice on this, are similar to those that I would have called out on the checklist. Maternity and paternity leaves. There are some complex rules around what needs to happen, for example, for, not just submitting to make sure that they get their statutory maternity and paternity pay or claiming that back, because you can usually claim 92% of what you pay out in SMP, SVP back from the government. But also you're required to maintain pension contributions, and that's usually calculated on the basis of qualified earnings. It can just be a little bit niche. So it's worth, especially if you're looking to make sure that you are not overpaying on these amounts, but also not meeting your fiscal obligations. That's usually a good trigger the first time you do it, to get some advice. Sickness absences, the statutory sick pay rules are quite complex. You need a period of sickness that is a certain length for it to trigger SSP rules. The way that you calculate what someone is owed in a given week, it's always the same for a week, but obviously this means the daily rate is slightly different if they work a 4-day week rather than a 5-day week. And also there is a concept of linked sickness, which is that, sicknesses that happen over a certain period of time, even if they're usually shorter than the usual trigger length for SSP, if they're within the time frame that is short enough to cover another period of SSP, those two become automatically linked. So there are a few little nuances around that. When setting up your pension auto-enrollment scheme, and making sure that you understand what filings you need to make on an annual basis, or when you need to auto pension re-enroll as well, it's worth taking some advice. If you have anyone that you have brought into the country, with complex immigration statuses, often it's worth checking whether or not they are a dual resident, because you may be required to withhold different amounts of tax. For example, someone may be working in the UK, but also be, under tax rules for the US to UK and vice versa is particularly complex, so keep an eye out for that. Any kind of ESOP and share scheme exercises. So if you operate a share scheme in your company and someone is exercising their options, depending on whether it's a tax advantage scheme or not, there is sometimes a requirement for people to pay income tax, depending on what the strike price is and what the fair market valuation is. Again, ESOP exercises, definitely something if you're setting up a share scheme to take specialist advice on. Company directors are also treated differently for payroll in complicated ways that I won't quite go into right now, but their NI contributions are calculated on a different basis. So it's important to understand, especially if you have founders, are those founders also company directors? Because then technically they will have a slightly different payroll setup. And equally, if you have contractors, there are rules in the UK and similar legislation in the EU, or often coming into place in the EU. In the UK, it's called IR35, but effectively, it's the tax authority trying to look out for people who claim to be self-employed contractors but are practically employees. And if you have a contractor who is, they call it inside IR35, you also have to process them through payroll, and they need to be identified in a payroll in a slightly different way to your normal employees. So these are things that I would say, if you're in the UK, and this is kind of also on this list, I would definitely treat any of these as a trigger to take some specialist advice. And other kind of key things to know in the UK, and a lot of these are fairly small nuances and things that can kind of be fixed over time. There are often similar things in other countries as well. But taxable, there are a lot of employee benefits that are actually taxable. So, for example, if you offer food to your employees, but it's not offered to everyone, or if you have a Christmas party that's more than £150 a head, these things suddenly become taxable. And there's a link there in the sheet, but there are more things that are taxable than you might expect. And ultimately, you do need to pay tax on them. And there are different ways to do that. You can either pay for them via payroll. You can do an annual P11D, which is kind of like a once a year report to the tax authority saying this employee needs to pay tax on this particular benefit that they got. Or you can get a PAYE settlement agreement, called a PSA. Each of those has a slightly different process, but all of them basically create an obligation to track these kinds of benefits somewhere. So it's worth, buffing up a little bit, especially if you have an office and in-office employees, because this is often where, things that get given out and stuff in the office can end up being taxable. Understanding what some of these things are and just having a note there of being able to track them as and when you do. And honestly, there are a lot of companies who sometimes decide not to do these things in order to not have that burden, which is also fine, but it's worth knowing that Taxman doesn't care whether or not you knew it was a burden or not. They just want their money. So it's worth making sure that you don't inadvertently trip into these categories. If you have an annual pay bill, so if annually you pay salaries of more than £3 million, you will need to pay what's called the apprenticeship levy. That usually gets handled by your sorry, I'm just going to sneeze again. That usually gets handled by your outsourcer or your payment software and submitted and provided. But it's worth noting, especially if you're doing budgeting and you haven't planned for that, you can then use that apprenticeship levy to pay for apprentices if you have any. But even if you don't have apprentices, you are going to have to pay the levy. And that's usually 0.5% of any pay bill that is over £3 million a year. You can reclaim usually 92% of statutory maternity and paternity pay, so not enhanced. So if your company offers something that's special, you can you don't get to claim that back, but the statutory payments you can usually reclaim 92% of that. Statutory sick pay, we've spoken about having various rules, and the only one here that we haven't spoken about there are some special rules for variable and 0-hour workers, particularly around making sure how you assess average weekly earnings, how you assess national minimum wage limits, and also how you assess their holiday entitlement and pay. And you may be wondering, well, if someone's a 0-hour worker, what does it even mean for them to take a day's holiday? Isn't that just the same as them taking a day not working? No, even if they're a 0-hour worker, they are entitled to 5.6 weeks of holiday a year. And there are special rules around how you calculate what that holiday payment is going to be, because obviously they don't have a day rate or a salary or anything like that. So it's worth making sure if you have any of these complexities that you're set up to deal with them. Now, I know that listing all of those off, that sounds like the most terrifying list in the world. And it's like, oh my God, we are going wrong on so many ways and different places. I promise you it's a lot, it's not as complex as it probably seems. And a lot of these things, they will come up one by one rather than all at a time. They will come back, they will come up piece by piece, and you'll probably only have to learn about one of these things at a time, but it's worth noting that they exist and just keeping an eye out for those trigger points to go and learn a little bit more about payroll. And then the last two slides I have are on creating efficiencies and scalability. So, as you can imagine, as a company gets more complex and has more of these complexities, the amount of work that surrounds payroll starts to grow. But in tech, and I'm assuming that most people listening to this are from a tech or another professional industry company, mostly salaried workers, it's very rare for there to be a dedicated person dedicated to payroll for anything under 300 people. And generally, it tends to sit in some combination of either generalist or founder, or between the finance and people teams. And where it eventually ends up, we see everything, but honestly, it is roughly about 50% of it ends up in finance, 50% ends up on people teams. And there are ways on that kind of list of duties and things to look out for, to split those duties fairly cleanly. The most important thing is to be aligned on the split of duties, to go through that early list with, if you're on the people team, your finance counterpart, or if you're right now the first person and the finance person, say, joins, like to go through that list and decide which responsibilities sit where. And to always keep an eye out for when you can hand it onwards. And the general common evolution is that payroll starts being kind of centralized on a founder or generalist, and then it goes into being split between HR generalists or people generalists and finance generalists. And then as the HR and finance teams equally grow in complexity and segment within themselves, it usually focuses into someone on the HR or people ops side of things, and someone on the financial control side of things. It's rare for FP&A people to be involved in payroll. And then eventually it transitions to payroll as a function. But it's worth keeping this evolution in mind and looking out for those points in time when it's natural to start handing it on, or to split it and hand it on to dedicated people in the team. And then from a perspective of scalability, payroll is seldom going to be a CFO's first choice for investment. Given the choice between putting $1 into R&D or sales and marketing or payroll, probably going to choose to put it into one of the former if I can. And it's worth noting that like hiring someone full-time to do a job like this is like the ultimate investment. Headcount is probably the most expensive kind of investment you can make. So it's worth making use of systems, and these don't always have to be fancy platforms. We see a lot of people doing great things with homegrown automations using Zapier and Google Sheets and Google Forms and good spreadsheets, and that can scale for quite a while. But also have a sense of the payroll complexity of your company. If you do weekly payroll, you have roughly 4 times as much payroll burden as someone who does monthly payroll. That's obvious. But also, do you have a lot of flexible or part-time workers? Do you have a lot of variable workers? Do you have 0-hour workers? Are you having to keep timesheets? That's often a good indicator that you are a complex payroll company. And the more complex you are, the more payroll pain you have, the more it probably makes sense to invest in this more and earlier. And the main thing is to keep the finance and people HR teams really well aligned and other teams well informed, especially around processes, approvals, and other things that people feel the need to feed into. And always remember that success is a factor of process and adoption. The most perfect process in the world fails if the adoption rate is 0. You need to get the right balance of perfect process and making it easy to adopt. So trying to bear in mind how you can make a payroll process as painless as possible. So that's me, and a lot of talking. But Osreen, I think you've been collating the question.
I have been. Sabrina, thank you so much. And I wanted to say bless you a couple of times as you were sneezing. So I hope you're recovering. I just wanted to say, yes, there's a couple of questions, but I just wanted to say, first of all, thank you so much for so much information. I think as operations people who are, I think, unknowingly going for, like any job that no one else in the company is doing, we always end up with payroll in one way or another. And I'm personally, as head of operations at Reframe and also dealing with payroll at Operations Nation, I could not be happier to have Pento back me. And again, like I'm not saying this because Pento are our partners. Pento are our partners because I started using Pento in one of my previous companies, and it just saved me. So it's all flipped. I'm not plugging in the sales pitch here, but honestly, I would pick Pento anytime. And also, I think this answers one question in a way. And Sabrina, I'm going to pass the mic back to you. And that question was ideal platforms to use to minimize the admin. And I'm personally going to say Panto, just because I'm a massive fan. It's made my life so much easier. And if anyone has any questions, feel free to DM me on Slack. I'm happy to answer. But Sabrina, you might have something else.
Yeah, I think also just really bear in mind, sometimes a lot of this is around the process around payroll as well, and a lot that goes into that data collation piece. As I said, I've seen people use ticketing systems. Either there are a few like Slack plugins that are like quite good as like very light touch ticketing systems that work well. Seeing people set up shared payroll inboxes and use something like Front to manage like a shared inbox, but also like Google Sheets, Zapier, automations. Half of the battle is like not forgetting to do something. Even calendar apps, just like setting up reminders to make sure that you don't kind of drop everything. What I would say is like once managing all of the reminders and checklists become a job in yourself, then kind of like start to look for another system. But in the really early days, sometimes you can do quite a lot with kind of homegrown automations and checks and things like that. And definitely, I know it's like such a minor point, but having that unique employee identifier saves a lot of time down the line. And I've seen people start it and base it on NI number, and someone NI's numbers changed because they came over and they had a temporary number, etc., etc. It's a tiny thing, but it saves a lot of time down the line to have that unique ID across all systems.
Brilliant. Thank you so much. And then we also have a question from Anna, who's asking, for company directors, what are the implications for of getting that wrong and treating them like normal employees? And also the flip of it, what if you accidentally start treating people who are not directors?
It's basically, I forget if it's more or I think it's less NI effectively that directors pay, although don't take my word from that, but it's definitely different. Like the way that NI is calculated and all the rest for directors is it's a different basis to what you have for normal employees. So it does mean that like they're potentially not paying the right national insurance contributions. Now, HMRC is probably not going to care if it's like more than it should be, but you're potentially overpaying if it is more, and if it's less, there's the potential that someone's going to come back and that the company and or the employee will get hit for a back bill that also has a requirement to pay interest on the difference. So it's basically a case of just getting it right. It is just different, and HMRC does expect you to mark someone as a director so that they can cross-check that with Companies House, etc., etc. And HMRC does have the ability to cross-check it with something like Companies House. So it's one of those things where the nightmare is having to call up HMRC, because it is not fun and it is not enjoyable and it takes forever, and you go through like the call dial 1 for XYZ labyrinth. It creates admin down the line because you and also would have to go back and fix it.
Brilliant. Thank you so much. And I hopefully that answered your question. But if you have any follow-up, please just switch on your video and feel free to ask or drop it in the chat. I'm going to go to a couple of other questions that we had submitted. One is, what is our responsibility for dealing with employee queries about their tax code? Is it employers' responsibility, or is it employees?
Yes. So if HMRC emails you or sends you an alert saying tax code has changed, you have a responsibility, and whoever, whether it's through the software and outsourcer, you have a responsibility to use that tax code, even if you think it's wrong. Now, we have come up against plenty of situations where we have spoken to people and it does genuinely seem like HMRC have the wrong tax code, but the employee has to take it up with HMRC and get HMRC to change it. Because if HMRC is telling you, use this tax code, you are not being compliant if you're not using that tax code. And HMRC, has more information than the employer typically. The example I use is like rental income. Like, you might look at someone's salary and be like, hey, they're paying way too much tax, but you don't know what other income they have off the books. You don't know if they got a massive interest payment last year that is being taxed in this year. If HMRC tells you you need to charge this tax code, you need to charge that tax code, but if the employee believes it's wrong, you do need to direct them, pick up the phone to HMRC. They are, once you eventually get through to them and you explain things to them, like, they are generally quite good about changing this. If the employee is a high taxpayer and submits online returns, sometimes you can go and you can do things that effectively tweak your own tax code, like online through the portal, by updating your expected income for a given year. But ultimately, if the employee believes that their tax code is wrong, you as an employer do not have all the information. The employee has to interface with HMRC. HMRC will not speak to you as an employer about changing someone's tax code. So I know that it's annoying, but you do have to direct the employee to go and interface with HMRC direct.
Brilliant. I can actually can probably count on the fingers of one arm how many times I have directed people to change that expected income on HMRC's website, just because it literally fixes their tax code, and it's a good intermediary step to before actually have them call HMRC.
Yeah, and often that does work. And the notifications that go out do tend to be fairly speedy. HMRC is also generally quite good about paying you back if you paid too much tax. But yeah, it's just the case that as an employer, you really don't have enough information. You are responsible for making sure the tax is done in accordance with the code that you have been given and the amount that you are paying them that you know about. But ultimately the employee is responsible for making sure that any of their other income is reported to HMRC.
Yeah, perfect. Thank you. And then on to the next question. That is, I think it's very tricky. And I think a lot of people have been asking this. International contractors, like it's always, it's always a debate. The question is how to find the best risk / compliance / cost balance for paying international contractors.
Yeah, it's very difficult, and particularly often people are referencing the EOR model here. And the hard thing is that EORs operate in a bit of like a legal tax grey area right now. We haven't seen it be tested in the courts yet to really kind of understand whether the EOR's interpretation of what their tax status and requirements and things are actually hold up when they go against the courts and the legislations. Generally speaking, what I will say is, like, you cannot outsource or offload the responsibility for a permanent establishment, and like that is like a very tax specific thing. But if you have senior directors or senior management or CXOs or even salespeople who are autonomous and able to direct their own deals in a different geography, there is a strong chance that whether you give them the title of contractor, EOR, most EORs, by the way, will not hire chief X officers anywhere. Like, they will make you do that as direct employees. But there is a strong likelihood with some of those roles that, regardless of like how you set them up, that you will establish what is called permanent establishment in that country, which will inflict upon you like the tax burden. I think one of the pieces of advice I would give people is, it's obviously in the EOR's interest to make it seem unbelievably easy to hire anyone, anywhere, under any circumstances, with, total parity to where you are. Be thoughtful about the geographies that you hire in. I'm not saying don't hire people remote. I'm not saying don't hire people in other countries, but I think it is better if you are hiring in lots of different geographies to pick a few countries perhaps to create hubs in that you can like understand their local setup a bit better. You maybe can get away with like an EOR and not have to set up an entity, but so many downstream effects. You know, how do you need to tweak an option plan? How do you need to deal with performance issues? You know, you are going to be subject to the laws of that country. So I would really suggest being selective about choosing a couple of countries to go into, even if you go down the contractor EOR route. Because I just don't think that there's really a way to get away with the admin. And just be aware also, and in that case, it helps you manage like the cost element, because if you do focus on hubs, eventually you will reach a tipping point whereby the cost to maintain an EOR is the same as incorporating an entity and hiring a local partner to, you know, to manage the HR and finance there, because EORs and things like that are very expensive. But that's the one thing I would say. And you know, and Pento hires abroad, and we have people, you know, hired through EORs, but we have over time become much more selective about which countries we actively recruit in, countries that we understand better than just the full range of all possible countries out there. And if there's one thing I would suggest, it's that be a bit selective. And it doesn't really matter which country, but at least you can understand that country's particular nuances a bit better. And then just be very aware of permanent establishment. There is really almost nothing you can do to get out of permanent establishment. If you establish yourself somewhere, spoiler alert, you're going to end up paying tax.
Brilliant. And I think one EOR is not equal to another EOR. From my experience, I was looking to hire someone in Germany, and one EOR gave me advice that was more about them selling their services and getting us as a client, versus another one who were very knowledgeable in the local tax, local laws. So again, be very careful when choosing your EOR partner as well. And we have another question for Anna, who says, on the IR35 point, Sabrina, you mentioned needing to include contractors on payroll. Is she right in thinking that is only if they hit the two company eligibility thresholds?
Yeah. That's only relevant to inside IR35 contractors. Your normal contractors that sit outside of IR35, you know, you don't have to. And if you don't hit the thresholds for being subject to IR35, then they're outside IR35. It is only inside IR35 contractors that need to be payrolled, but you do need to mark them on payroll as IR35 contractors. There is, for lack of a better term, a special tick box on the filings that go to HMRC that need to be ticked for those people. Because again, like HMRC, one of the things that they insist on is to track it. But yeah, if you're exempt from IR35, it's just not a thing. This is very IR35 specific.
Brilliant. Thank you so much. And last question, probably to crown them all. How can one grow as an operations manager, and at what stage does one who have to specialize in something like FinOps or People Ops after wearing multiple hats?
Yeah, I mean, it's a very non-payroll question, but to give anyone who doesn't know an idea of my background, I started at my last company, Tessin, 7 or 8 years ago as a chief of staff, doing a little bit of everything. Eventually became CFO, left there about 2 years ago to go join Pento as COO, and have hired many generalists over the years, some of whom specialised and some of whom didn't. And I think the really important thing to understand is generalism, what is it to you? Like, is it because, you know, you want to keep your options open and you want to try a few things, but actually you would like the certainty and the craft of becoming very, very good at kind of one particular area? And if that's true, like over time, naturally, you know, generalist operations roles tend to become very few in a company as they become bigger, because, you know, you have enough work to segment it off into specific people with specific delineations of duties. And I think you know, you do have time up until that point to decide like what is right for you. And, you know, those points will often be driven more by the company than your kind of like your own desires. So like, we now need someone to do finance full time or people full time. Is that you? And then, you know, from that point, then finance and people will, you know, finance will specialize into FP&A versus financial control. People will specialize into people ops versus business partnering. You know, over time, as companies become more complex, roles become more specialist in general. And so I think like there's a point there, which is, you know, is that what you want? And, you know, I think, you know, where do your skills and aspirations lie in terms of which specialist path you would take? Or alternatively, there are some generalist roles that do live on at companies. There just tend to be very few of them. And typically what you see is that like career generalists either keep going back to earlier and earlier stage companies because, you know, a company grows to the point where it needs to specialize. You kind of, when doing a job, is working yourself out of the role. Or they tend to go down what I would call like a true chief of staff roles. A million different things get lumbered under like the chief of staff banner. But a true chief of staff, I would say, is like generally like a CEO surrogate. Someone who can kind of be across everything and jump into everything. There are also like COO roles, which tend to sort of go that directions. There are also some roles that some companies will have like a business operations function or a strategy team that are kind of like the firefighters of, you know, that kind of like work on kind of projects rather than an area of ownership. The only thing about particularly chief of staff or business operation roles is that you have to then be comfortable with not owning any one particular area of a business, which can be difficult if you have come from a generalist position where you have owned both finance and people, because it is very different. You are not personally the person to whom finance or people or R&D or whatever reports, but you have to go in and work with those teams. So I think, you know, it really depends on kind of what you're optimizing for in your own career. And what I would say is, you know, it's hard, understandably hard for companies to take a lot of these things on trust. Some of these are big roles with like big implications for the business. You know, if you start out as a generalist and even if you want to become like the head of finance, like that's a big thing for a company to say, trust someone who's never done accounting before to take that role rather than to hire an accountant. I'm a big believer you never get anything for free. What I would say is like just really understand what you want to do and be really driven in demonstrating your ability to do it. Like, and then once you have demonstrated it, then ask for it to be recognized. I think a lot of people ask for the recognition before they do the work to demonstrate it. And I think especially coming out of a generalist into a specialist role, that's a really hard thing for a business to take on trust. So I think if that is the path that you want to go, you kind of have to bite the bullet and spend some time demonstrating it in order to get the business to then back you. And I do think that that's fair because it, you know, it's risky putting someone in some of these positions sometimes, like they're very important positions. But yeah, have a think about like what drives you. I've known lots of people who would have sworn blind that they had to be generalists forever, and then they hit on something that they, you know, start to dig into a little bit deeper and realize actually they really wanted to go down one particular path of craft. But there's no right or wrong. It's just, you know, keep those doors open, demonstrate the skills that you want to be recognized for. Yeah, and just be conscious that the role that you want, especially if you are a career generalist, may require that you have to keep going back to earlier stage companies. But also there's a lot of pride to be taken on that. If you get a company to a point that they no longer need generalist roles, a lot of companies never reach that point. So that is something that career generalists need to learn to take a lot of pride in, even though it means you are kind of constantly screwing yourself out of a job, but it's a good thing.
It is a good thing. Sabrina, I couldn't agree more. I think constantly firing yourself out of a job provides a lot of growth opportunities. And I think also in operations, we have this really unique ability to craft the job that we really want to have by either firing ourselves or specializing more and hiring someone else in our jobs. So I think it's a really good position to be in, and early stages is where all the fun happens. Who cares about later stages? That's my personal opinion.
Exactly.
Brilliant. Sabrina, thank you so much. This has been incredibly informative. And I think at points, I myself was getting a little bit of an imposter syndrome. I was like, do I need to fire myself from this already? But I think with your guidance, this is going to be easy. We will be sharing your slides. Thank you so much for putting all the information in them. There's a lot of links, I know, and you and Lauren and Amy are in the chat of Operations Nation community. So if anyone has any questions about payroll, you can always go to the Pento team. Really appreciate your time and your knowledge, and I know that we'll be seeing you everywhere in the community and hopefully in future events as well.
Great, perfect. And if anyone wants to reach out to me on LinkedIn or ask a question in the Ops Nation Slack group, please do. I'm always there. It's all good. Lovely to meet you all.
Brilliant.
Yeah.
Thank you so much, everyone, and thanks, Sabrina. Bye.
Bye.